Grand rising, everyone. Woo!
Woo! Grand Rising!
Grand
Yay!
Rising.
September the 10th, 2025.
Yeah, moving right
I
along.
love Wednesdays, okay? It's the middle of the week, and you get a chance to reflect on your goals, your dreams, your accomplishments, what you have done, what you haven't done, what you need to do, what you're going to do. You get a chance to reflect, okay? We still got Thursday, Friday, and Saturday to go so that we can end the week with a bang. So I'm excited. Uh, do I have any more people? Anyone who took the audacious challenge and opened up a brokerage account? Anybody new? Anybody new? Nobody new?
I'm not new, but I've been enjoying watching my money go up and down or whatever. It's fun. It's fun.
That's cool. We're doing this for long term. This is a long-term wealth building journey.
Exactly.
And we're going to talk about some of the principles that every investor should know. That's where we're going to go today, okay?
Mhm.
Okay.
But before this, I'm glad you had a great experience. So you had a great experience opening up your brokerage account, right,
Yes,
Deidre?
yes. Yes, I
Queen?
did. I have.
Yep.
It was easy. It wasn't as challenging as you may have thought.
No, it's easy. It was surprisingly easy. Yes, it was. And a good experience because I'm meeting wonderful people and yeah, great.
That's amazing. I'm so happy to hear that. And it's about to get greater from here, okay?
Okay, sounds good.
As we on this wealth building journey. So those who know, my name is Lakeisha LeGrand. Welcome to the Grand Rising Elizabeth Show.
Yes.
Yes, yes, yes. We have some great calls shows every Monday through Friday. Today just happened to be Wealth Building Wednesday. Wealth Building
Building
Wednesday.
Wednesday.
And we are a group of fantastic women and men growing together. And I'm so excited about our successes. I'm so excited about the growth and transformation that we are working on together. Because being successful is not a solo act, right? It's a team effort. It's being around like-minded individuals, okay? We want to grow
Exactly.
and we want to build together. So I'm excited about being a part of the Grand Rising Elizabeth show. Okay, so everybody knows I love to start my show off with a millionaire billionaire success story. And today our story is going to be on anybody know who's the richest family in the world? Anybody know the richest family in the world? Well, surprisingly,
I know they say the Rockefellers, but I just when I look at uh uh this other country, something die anyway, where they're kings and queens and they have all this stuff built up, and to say that that other guy is the richest, I'm like looking at
well, you richest person, richest individual,
uh-huh
okay? We're talking about the richest family in the world.
family.
The richest family in the world. So the richest family in the world is the Walton family. Okay, we're going to talk about Sam Walton and the Waltons family legacy.
Okay.
Sam Walton grew up during the Great Depression in Kingfisher, Oklahoma. Life wasn't easy. His family struggled, and Sam had to work small jobs just to help ends meet. But those hard years shaped him. He learned discipline, frugality, and above all, the value of hard work and determination. After serving in the Army during World War II, Sam didn't step into wealth or privilege. Instead, in 1945, he scraped together a $25,000 loan from his father in law and his own small savings to purchase his very first Ben Franklin variety store in Newport, Arkansas. He didn't know it then, but that single store was the spark of a revolution. Sam's genius was simple but powerful. Sell more for less. He studied customers' behavior, cut costs, and passed the savings on. People in small towns who were often overlooked by big retailers suddenly had access to affordable goods. In 1962, Sam opened the first Walmart in Rogers, Arkansas. His mission was crystal clear: help people save money so they can live better. The formula worked. Walmart expanded across the South, then across America, and eventually worldwide. But Sam wasn't done. He saw another need: bulk savings for small business owners and families. So in 1983, he launched Sam's Club, a membership warehouse offering discounts on large quantity goods. Today, Sam's Club has over 600 locations, serving millions of members. Sam Walton's idea wasn't just about selling, it was about building community, empowering people, and keeping prices honest. That humble loan in 1945 has multiplied into a staggering fortune. The Waltons family net worth is now estimated to over $430 billion, making them the richest family on the earth.
Mm,
Walmart is the world's largest retailer and private employer with over 10,000 stores worldwide and millions of associates. Sam's children and grandchildren each hold billions of Walmart stock, continuing the legacy of ownership and stewardship. The family reach goes far beyond Walmart stores. Walmart and Sam's Club, that's their core retail empire. They own the Denver Broncos. Rob Walton's group bought the NFL team in 2022 for $4.65 billion. Ooh, you wanted that bad.
right. Right.
Arvis Bank. John Walton runs one of the largest regional banks in the Midwest. Crystal Bridge Museum of American Art is owned by Alice Walton, created a world class museum in Bentonville, Arkansas, free to the public. They do a lot of philanthropy work. Despite their fortune, the Waltons have invested deeply into the community, the arts, and education. Walton's Family Foundation focuses on education, reform, environmental conservation, and local community development. By 2020, the foundation had been over $6 billion in grants. They giving over $6 billion in grants. Well, sometimes it's being in the right place in the right time, right? Somebody got
Yeah.
lucky.
Yep.
Look, a lot of people got lucky. Got blessed. That's amazing. Alice Walton Vision, she poured over $1 billion into the Crystal Bridge Museum, bringing masterpieces of America art to Arkansas. Whole Health Institute and School of Medicine. Alice is funding new models of healthcare. Christy Walton donated billions to cultural and educational causes, making her one of the most generous philanthropists of the 2000s. Sam Walton passed away in 1992, but his philosophy lives on in every Walmart and Sam's Club. Work hard, dream big, stay humble, and serve others. So this story to me is proof that you don't need to be born wealthy to build wealth. Okay. Serving people creates impact and fortune. A clear mission can outlive you and bless generations after generations after generations. Today, the Walton family destiny dynasty, okay, is not just about money, it's about the power of vision, discipline, and the faith in people. From dusty shelves in Arkansas to billions in global wealth, Sam Walton's journey will forever be an American inspiration. This is one of the quotes I have really liked. I found out about years ago. To celebrate your successes and find humor in your failures. Like sometimes you just gotta laugh at yourself. Okay, it's okay. It's not that serious. You're gonna be okay. We got God on our side. Okay, it ain't over till it's over. You know, a lot of times people who are on that entrepreneurial guide travel lane, you know, we just got to stay in the game. You know, time and chance, everybody get time and chance. We just have to stay in the game, laugh at it. It's okay. You know, just know that you're walking in the footsteps of millionaires and billionaires because they've been where you are. They've been where we are. They, you know what I'm saying? So just stay in the game and don't give up. uh don't take yourself so seriously. You know, relax. You know, it's okay. You know, you make a mistake, it's okay, long as you learn from it. You know, learn from what it is that's going on with life, period. You know, learn from it. Don't make the same mistakes over and over and over and over again. Loosen up, and everybody around you will loosen up. Have fun and always show enthusiasm. Enjoy the journey. Enjoy your wealth building journey. Just enjoy it. Have fun, you know, whether it's ups and downs. When all else fails, put on a costume and sing a silly song. That was Sam Watson. I love that. Love that. So, are y'all ready to learn some 7 core principles that every investor should know? Are y'all
Yes,
ready?
yes,
Are y'all
yes.
ready on this wealth
Yeah,
building
yeah.
journey?
Got my notes, my notebook and stuff ready. I'm ready.
Okay, welcome, Miss Edwards. Welcome, Evelyn, Sharonda, everyone. Okay, let me share this screen. Can everyone see this?
Yes. Mhm.
Okay, let me pull this up. I wish I knew how to minimize this black long strip.
At the bottom or what?
Nope, this is going across. Okay, building financial freedom. That is the journey that we all should be on. Living that we all should be on. You know, leaving a legacy to our children and our children's children. You know, our path that we're on, is bigger than us. It's really bigger than us. Your nieces, your nephews, your little cousins, you know, brothers and sisters. They need to see more success stories. You know, they need to know that if you can do it, they can do it as well. We have to, you know, teach one. We have to reach back and bring them up. We have to show them something different. Okay. So today we're going to be talking about 7 core principles every investor should know. We're on the road to building wealth and building legacy. I am your host, Lakeisha LeGrand, also known as Madam Finance, because I help everyday people build wealth with confidence. We're going to set some ground rules because this is actually being recorded. So let's keep the energy positive, good vibes only. This is not a quick get rich session, it's a wealth building session. I'm not a day trader. I will not invest for you, tell you what to invest in. This is an educational session. I'm not a financial planner. I am an investor and educator. Be 100% present and take good notes. Grab your notebook, your pen, and your paper. Invite someone that you care about to the Wealth Building Wednesday show, okay? Because we need to share this information. It is free. And let's stay to the end. If I have shared some valuable information with you, please, I want to earn your following, okay? Please follow me right here on the side, Ask Madam Finance on these platforms. It would be truly, truly appreciative. So I went over this a little bit. This is for educational purposes. I'm not a financial advisor or planner. If you are making this decision to make any investments, please seek professional help or do your research. Do your research. Don't just listen to what's out here. Do your research. My qualifications, for those who don't know, I have a bachelor's of science in finance and an MBA in business administration. I have 20 plus years in the financial industry. I'm a licensed agent from 15 plus years dealing with life, health, property and casualty, and Medicare, which we're in that season right now. I'm a former banker of JP Morgan Chase, former Series 6 and 63 license. I learned and seen so much working at the bank. Um, I'm a recent new co-author of Building Wealth, Building Legacy. Woo woo! I had an
Woo-hoo!
opportunity to write a book with one of the original sharks on Shark Tank, Kevin Harrington. A few weeks ago, had my first book signing and sold 100 books in 3 hours. Woo! I'm still on high about that, y'all. I'm like, God is good. I'm still reverent in that right now. I'm still, yeah, yeah. And I have a book of business of over 1,000 clients who I help them in all areas of their lives.
Yay.
So I want to give you all congratulations, okay, for showing up, for being here. This is the first step to achieving your wealth building goal because you show up. So I want to congratulate you. So we're going to start with what is passive income? I love passive income. I don't know about y'all, but I love me some passive income. Passive income is money you earn without having to work for it every day. It's income that keeps coming in even when you're not actively working. So, principle number one, which I feel is very critical, we want to always start with clarity. Build a plan that aligns with your goals. This isn't optional, ladies and gentlemen. Planning isn't optional, it's a must in all areas of your life, not just financial. You also need to be planning in your personal life. What is your goal? What do you see yourself in the next 5 years? Or, what do you want to accomplish this year? What are your plans for that? What are your plans towards your goals? Planning isn't optional, it is a must. Can I hear somebody say a must?
A must.
Planning is a must.
You got to do it.
A must.
With the right plan, you, as an investor, turns your vision into momentum and your goals into a reality. That should have been a mic drop. Boom!
I was just going to say, that's some good stuff, girl.
Should have been a mic drop. Bam!
Oh.
Your plan. Let's talk about your plan. Your plan should be realistic. You should review your plan at least annually, every 6 months, in some cases, monthly. Make changes as your life circumstances change. Don't look at it as a negative because things change and we just have to be able to adjust. Don't quit, just adjust. If something is not working the way you want, it's just to adjust it, adjust it. Play with it. We talked about it earlier. Don't take it so serious. It's going to be okay because God is with us. If you fail to plan, you already planned to fail.
Yeah.
Let that resonate for a minute.
Mm-hmm.
If you fail to plan, you've already planned to fail. Core principle number 2, take action. You got to take action. The Bible says faith without works is dead. Like it's always a requirement of us. So we got to take action. Don't wait for the perfect time. There is no perfect time. The Bible says he who waits on perfect conditions never get anything done.
Really?
We're trying to be perfect. Don't be perfect. Just do and learn on your way. Start now. Grow steady.
Here's how to kill it.
Saving and investing can't wait. We need to do it now. We can't keep living our lives as though we have 1,000 years to live.
Mm-hmm.
People are waiting on you to get it together. People are waiting on you to show them the way. Start now. Grow steady. Saving and investing can't wait. Core principle number 3, diversity. Build a portfolio that aligns with your risk tolerance. Your financial portfolio is not going to look like your husband's portfolio, your sister's portfolio, your girlfriend's portfolio, because your needs are different. Your goals are different. Your age is different. There's so many factors. So stay in your lane. Trust your plan. Stick to your goal. Diversification is protection against both risk and regret. So let's actually take time out to diversify, really evaluate what's really going on. What is your goals within the next 10 years? This is wealth building. So let's get this clear for people that are new. Let's get this clear. This is not get in, get out, get in, get out. We are talking about wealth building. So it's going to pay off over time. We're talking about basically buying, holding, and basically maybe rebalancing for long term, for 20 years.
Can I withdraw cash in your game? I'm short on money.
For 15 years, whatever it is that your goals are. Core principle number 4, control what you can. Fees and taxes matter, especially when you wealthy with billions of dollars. Just a little bit, 10 cents, 15 cents a dollar can make a big difference. So you got to understand the fees and taxes. Markets are unpredictable, but fees are certain. So we got to be aware of the fees that are taking place. What are the fees? That's what you want to be asking. What are the fees? Are there any fees associated with this when we're talking about index funds and different things like that? Number 5, we have to manage losses, diversify, rebalance, and stay steady. Avoid chasing complex products. Don't get into investments that you do not understand. That's why I love teaching dividends, stocks, REITs, for those who are new, real estate investment trusts, and ETFs, exchange traded fund, because they're simple, they're easy to understand, and you don't have to be an expert to do it. Prepare for losses and protect your portfolio. It's no different, always going to be some type of loss. The goal is to minimize that loss. Even when you're in business, you're going to have some losses, right? The goal is to minimize those losses, right? So temporary dips are part of investing, but significant losses can take years to recover, especially when you have a lot of money. But if you stick and stay, it can definitely recover. We know what we talked about it, I think a couple of weeks ago. We talked about Warren Buffett, how he talked about rule number one, never lose money. Rule number two was to remember rule number one, never lose money. Use diversification such as bonds or cash equivalents to reduce volatility, a lot of changes in the market, and rely on proven long-term strategies like dollar cost averaging and rebalancing rather than chasing complex products. And I'm going to go deep into cash, dollar cost averaging and rebalancing, because I've mentioned it several times through in the past, but I never really elaborated on them. And this is what I want to elaborate on. What is dollar cost averaging? I tried to break this down in baby terms. Dollar cost averaging means you invest a set amount of money on a regular schedule. No matter what the market is doing, sometimes you buy shares at a high price, sometimes you buy shares at a low price, but over time, the average cost of your investment evens out. Okay, and I'm going to better explain that on this next screen. A quick analogy. Think of it like shopping. You buy groceries every week. Sometimes apples are expensive. Sometimes they're on sale. But but by buying consistently, you never overpay too much. Your cost averages out. So if that wasn't clear, let's go here. An example. You invest $100 every month into a stock or ETF on a consistent basis, right? Month one, the stock is $10. You buy 10 shares. Month two, the stock drops half. It went down to $5. Now, this is what I want to kind of put emphasis on. This is where a lot of people make a lot of mistakes. I know I've talked about this in the past. So most people would get scared. Oh my God, it went down. Oh, it went down half. I'm losing my money. Oh, they pull out. It happens so many times that they pull out. No, I need you to change your mindset. You know how you have a Gucci purse and you wanted that Gucci purse, or you wanted this man wanted, I don't know, some shoes, these bad shoes that cost. But you don't want to spend that $500 on them gators. You don't want to spend that $800 on that purse. You like, I'm gonna wait till it go on sale. Then it go that purse. Then it finally went down to 500. Then it finally went down to 200. Then it went down to 150. Oh, I'm gonna get it now. Right? You got a good deal. So look at this the same way. Now it went down to $5. That's a good deal. Now it's time to buy. Because we're talking about long-term investing, right? So it is definitely gonna average out. Remember some of that cost, dollar cost averaging. So now that same $100, because it went down to $5, now you're able to buy 20 shares. Because it went down, you got it on sale. Then month 3, the stock raises to $20. But we stand on our schedule every month. We paying that $100 no matter what. So this time, you was only able to buy 5 shares because now it went up to $20. So you totally invested $300. Total shares is $35. 35 shares. The average cost per share now is like you got all those shares of stock for like $8.57, not $20, the highest price. So this shows the power of buying consistently. You reduce the risk of buying at the wrong time because you're going to buy when it's high, when it's low, when it's middle, and then it's going to average out across the long term. Do you all understand that? Did I make that kind of clear? Okay, all right. So don't worry, look at it as the stock's going on sale when it goes low. Don't necessarily like, oh, this is the time to buy. This is the time to buy. This is really truly a good time to buy since Trump been in the office and with the tariffs and different things like that. Like March and April, the stocks went down. This is the time to buy because through history, it always shows that eventually the stock market always come back up.
Mm-hmm.
This is when the millionaires and billionaires is being made. When you can buy them like that, $5, it was more than $5. And then it went up to $20. Okay, you about to, and then it went up to 20, you know what I'm saying? So please, don't be scared. Stay in the game. We're talking about wealth building. Dollar cost averaging. So just to make sure to hone in and make sure we understand the dollar cost averaging. I'm a visual person, so I kind of like the visual. So we still paying the $100 every month religiously, no matter what. We paying ourselves first. This is what I'm doing because I need to retire. My kids need to go to college, or I want to go on vacation. So I'm going to do this religiously for 5 years, 10 years, whatever your goal is. Consistently. So this is the levels at which you're buying. Here, you hear sometimes you buying the stock here. Sometimes at $10 a share. Then it cost went up. So now you buying it way up here. Then it went down low. Now you buying it up here. So this is kind of give you an idea. You're going to be buying it at different intervals. And it's all going to average out. So that's dollar cost averaging. Number 6, rebalance regularly. Over time, some investments will grow faster than others. Rebalancing brings your portfolio back in line with your goals and risk tolerance. An example. Stocks versus bonds. This is a basic example of rebalancing. You decided your portfolio should be 60% stocks, 40% bonds. That's your risk time. Like, this is how I want my portfolio to be. So after a few years, your stocks do really well. And now your portfolio is 75% stocks and now only 25% bonds. That's riskier than you intended. You're like, nah, I kind of feel more comfortable, with the 60-40, 40% bonds, 60% stocks. So rebalancing equals selling some stocks and buying more bonds to bring it back to that 60-40, your comfort zone, right? Another example. Apple stock growing too large. Apple stock is just booming in your portfolio. So you start with 10,000 divided evenly across 10 stocks. You got the 10 stocks and boom, $1,000 for each of the 10 stocks. Apple does amazing and grows to 3,000, while some others are staying the same. So now Apple makes up 30% of your portfolio when you only wanted each of your stocks to be 10% across the board. So now you got to do a little rebalancing. You want to trim it, you trim it Apple back down and redistribute it into the other stocks. So now you make it even across the board because you want everything to be even across the board. That's what we mean by rebalancing. The analogy of it all is that rebalancing is like trimming a tree. You cut back the branches that grew too wild so the whole tree stays strong and balanced. That's the great analogy for rebalancing. Core principle number 7. Tune out the noise and trust your plan. There's going to be so many people out here. Oh, you need to buy this stock. Did you hear this? Oh, this stock going to make you a millionaire. Oh, this stock, if you don't get it, you better get it now or you're going to miss out. No, ignore the noise. Daily market headlines and financial news stories may be more relevant to short-term traders, day traders, short-term traders, but not long-term investors.
Mm-hmm.
Markets will always rise and fall, but stay focused on your plan because through history, it shows if you stay consistent, stay the course, it will come back. The market will come back. It might take a while, but just stay in the game and just be consistent. Just be consistent. Can I hear somebody say consistent?
Consistent.
Consistent.
Okay. Be
Consistent.
consistent. Yes. I think a couple weeks ago, we talked about ownership, the importance of ownership.
Mm-hmm.
We got spending down pat, but we don't have ownership down pat. Ownership produces passive income. Constantly spending drains your money. Ownership grows money. Paying your AT&T phone bill equal money leaves your pocket every time you paying it. But if you own AT&T shares, it equal dividends coming back into your pocket quarterly. Mm-hmm. Every 3 months, you can count on your passive income coming in. We got to figure out, when we're talking about that plan, how much do I want to come? Do I want a passive income to pay my bills? So what really got me excited, because I know some of you have heard this story before, but what really got me excited, when I was working at Chase, and I have a way with people and they just, gravitate and we just get to talking about everything, right? And so at that time, women was always talking about they need a sugar daddy. They wanted a sugar daddy. So we got to talking about the sugar daddy. Okay, what did so she was so jazzy. She was older. She had been investing for quite some time, right? She was a newbie, had 401k. She just had all this stuff, but she had been investing for years. And so she said, sugar daddy, girl, my dividends is my sugar daddy. My dividends pay all my bills. I was like, okay. I was like, okay. All right then. And I know it was well over $10,000 a month. I can't even remember the lady's name. I don't know her name, but she definitely put an impression on me. When she said that, and I looked at her account. That was the thing. I got a chance to look at people coming like, wow, what they do. So I've always inquisitive. I'm a Gemini, so I be asking questions, right? So then another young lady, similar, said almost the same thing. Her dividends was paying her bills. And at that point, I'm like, I want to be like them because whatever they doing, I like it. You know what I'm saying? They was jazzy, dressed nice. You know what I'm saying? Ladylike. You know what I'm saying? Like a boss for real. So I started on my journey to investing. Back then, it was something called share builders, right? We talked about on some of the previous courses about partial shares, how anybody can invest. If you got $5, you got $5. You got five on it. You got five on your stock. Can you get $5 on your stock?
Yeah.
If you got five on it, you can be an owner. Like you can be an owner with $5. It was called share builders. I don't know if they're still around or not, but it was share builders. And if a stock costs $50 or $100, you don't have $100. You got $5 because if you got $5, you can put $5 on that share and be our owner. You an investor now, okay? I was an investor. That made me feel good. I'm an investor. And you just being consistent, being consistent. What are dividends? Dividends are payments company make to shareholders. They come from companies' profits. They're paid monthly, quarterly, or annually, depending on the company. It's a way to create passive income while you own the stock. They are making so much money. That's basically saying we're making so much money, we can't spend it all, so we will pay you for your support. I loved it. I love this is to why I love dividends. I don't know. Maybe I like the little hearts that go. I keep showing this little slide right here. But the reason why I love dividends, the reason why I love ETFs, the reason why I fell in love with REITs, which is real estate investment trust, how to be a landlord, get into the real estate game without being a landlord, without worrying about toilets, without having to manage property, is because it's lucrative and uncomplicated. I like lucrative and I like uncomplicated, okay? Actually, I love lucrative and I love stuff that's not complicated. It's an easy investment strategy to learn and use. You get paid by top companies without doing any work. How cool is that? You can get checks coming in quarterly or monthly. You can cover monthly bills. We talked about this last week, how to turn your bills into paychecks. Reliable income stream that you can count on. Helps build financial freedom. You are getting paid just for owning shares. We can pay our way to wealth, freedom, but we got to do the work. Dividend reinvestment plans. Some people might know it as DRIP. If you hear the word DRIP, that's what it is. Dividend reinvestment plan. So once we start on this wealth journey, we're not here to buy, sell, buy, sell, buy, sell. So you want to take the money that they give you monthly, quarterly, or annually and have it automatically reinvested. Automatically reinvest that money instead of you getting a paycheck. Have it automatically reinvested to buy more shares of that stock. You can have it set where you don't even have to worry about it. It just does it automatically. That's how you're going to grow wealth a lot faster through compounding. You being consistent through all these years, and all these years is constantly reinvested and buying more shares of stock. Great for beginners. Focus on growth. It helps build more shares over time. Benefit from compounding interest over time. It's truly gonna pay off. So you can have different buckets within your portfolio. One, this is specifically for my retirement. I'm not touching it. I'm not. If you're worried about you might touch your retirement, then maybe you might need to have another bucket that's just for emergencies, or you want a trip, you have this that you go in that one, but don't go into your retirement, because we all should have a retirement plan, especially if you are working, you're an entrepreneur. You got to do things differently. You're not working on a job, you don't have a 401k, so you have to do things differently and create your own retirement plan. If you don't do it, I don't know who else is. So we have to make sure that we're thinking about our retirement. So this is an example, a slide that I've shared before, dividend stocks earning at a glance. This was a fact that 5.7 billion in dividends during the first half of 2025. Verizon. We talk a lot about stocks here at Wealth Building Wednesday, and mostly I talk about a lot of stocks and ETFs and REITs that are all under $100. All under $100. So with Verizon, there's 10,000 shares of Verizon. This right here is the ticker sign. So over time, it doesn't have to be 2 years. If you have money in your portfolio, if you have money, it just will eventually add up. But over time, let's say you purchase 10,000 shares of Verizon. That means that over the time you have spent 430,000, 800,000. The dividend yield is 6.3%. I just want to kind of show y'all the power of being consistent over years, right? Annual dividends. Now you're going to get, this is what they're paying you, $27,140 every year that you can count on like clockwork. For year after year after year, you can count on that. Quarterly, you break it down. You break it down quarterly. Every quarter, you will be getting $6,785 for the rest of your life. And it's going to keep growing and growing because you're still going to be investing and buying. So it's going to get gooder and gooder and gooder. Your monthly dividend, when you break it down monthly, you're going to be able to count on $2,261. Okay, I know the some like, woo, 430. Believe me, through your lifetime, you done spent way more than that throughout your lifetime on all kind of items and things and paychecks and working. You have spent more than that. But even if it takes a long time, or 20 years, or 10 years, or how many years, isn't it worth it? Isn't it worth it? I say it's worth it, because what are you getting right now? I know this could, sure, I would love to get this, you know what I'm saying, on a regular basis, like clockwork. And you know what's so cool about this? That this could be passed down to your children, your children's children, your favorite niece, your nephew. This is true. This could be passed down and can still be continued year after year after year after year. Generational wealth for the rest of their life. Make sure you got to have an estate plan. You got to have an estate plan. You got to have a plan. So just if that's just too much for somebody to conceive, like Lord have mercy, that's some large numbers. Look, K-Shop, Madam Finance, I don't know. This just seems like a lot. Then let's break it down in baby terms. Can we just do one goal at a time? How about we do one goal at a time? Verizon monthly bill is like $70 a month. That means you can pay $840 a year. Somebody might want to take a picture of this because this is like a math, that you can do with each and one of your bills. So that's like $70. We took $70 times 12, and that's how we got $840 a year. Verizon pays a dividend of $2.66 per share. To make $840 a year, you take that $2.66 divided into 840, you need only 316 shares to make your Verizon cell phone bill free for the rest of your life. Free.
Wow.
Then you go to the next one. Okay, what's the next bill? Okay, let's go to the next bill. Okay, and you just do baby steps. Baby steps. It is 9:53. So here go another Verizon, just $35 per share, 316 shares. That means you just spent $11,060. The goal is to make your payment disappear, your cell phone bill disappear and be free, and turn your bill into a dividend stream. You're coming from consumer to owner. Consumer to owner. We want to own what we're already using. Warren Buffett quote said, "Someone's sitting in the shade today because someone planted a tree a long time ago." We got to start investing now. Overall, there's no better time to start thinking about that path than today. A tree takes time to grow. So will most smart investments. Start early, be patient, and let your money grow. Here go a couple of golden nuggets. Losses are temporary, but quitting is permanent. Don't quit your path to wealth building. Keep it moving, keep it going. Start small and grow over time. Be patient. The Bible says patience is a virtue. Reinvest dividends to buy more shares. Cover bills one by one. Start with your phone bill, then your light bill, then your mortgage, etc. Maybe even your card notes, okay? Markets move every day, but wealth moves when you stay on course, when you stay consistent. Consistency builds kingdoms, ladies and gentlemen. Invest regularly, even with small amounts. Dollar cost averaging lowers risk. Wealth is built with discipline, not luck. Being consistent, having a plan. We want to focus on quality companies. We talked about that several times. Quality companies like Coca-Cola, P&G, Johnson & Johnson, Walmart, PepsiCo, McDonald's. Long-term dividend payers. They've been paying for years. They're not going anywhere. They have strong financials, reliable products and services. We talked about recession plan companies. These are also recession plan companies. They're known as dividend kings, and some of them are known as dividend kings and aristocrats. How do I start investing? What do I need to do? It's called open up a brokerage account. These are some of the brokerage accounts that are popular. My favorite is Charles Schwab and Fidelity, but E-Trade is good. Vanguard, a lot of young people use Robinhood. I like to stick with the ones that's been around for a long, long time. They've been in the game. I actually own stocks. They got some amazing stocks that you can purchase and buy. Customer service is amazing. You can learn a lot. They got a lot of educational information on these sites as well. The reality of it all, if you don't find a way to make money while you sleep and get passive income, residual income, you will work until you die or leave or living in poverty. It's your choice. What do you choose? Let's stay connected. I am Madam Finance. If I was able to share some valuable information, please follow me uh, through the platforms. I have people that are actually watching me. They're watching Madam Finance and they're also watching Natural Living by Design. I could really truly use your support. I thank you so much for your time. And was this information helpful? Yes, Queen. You're on mute.
Yeah, I just wanted to I have about three of my IntelliTravel queens on here. I had told you that I told them about Wealth Building Wednesday, and they're on.
Yay!
Um,
Welcome, y'all. Hey!
any of you want to
Hey,
just
hey, hey.
do
I
a
hope
holler?
I wasn't on my best behavior, but maybe next time. I get excited sometimes, okay?
So if any of you want to say something or ask a question real quick.
Was
I
the
just want to say
information helpful? I want to know, was the information helpful? Did you learn anything today?
Yeah.
it was definitely, this is Delta McKinstry Street down here in the ATL. It was definitely helpful for me just to know that there is, besides what I do, there's, another something that I can add to what I do and better plan for the future. Like I said, for me, I don't have the 401k or retirement X, Y, and Z. So this gives me an out to how I can build that and learn how to better educate myself financially as far as trying to build that long-term wealth. So yes, it was helpful for me. Do I need to learn more and better understand it? Yes. So I would definitely like to follow you, have your information. If I have questions or concerns and things like that, then I can connect with you and get that answer. But yes, it was definitely helpful.
Lakeisha,
Absolutely.
bring us together. Yeah, thanks. Thanks. I think Sheila wanted to say something.
Oh, okay. I thought I had got out of it. Okay, I didn't. I thought I did. Okay.
You're good now, honey. Sheila, you want to go ahead, honey?
Yeah, I couldn't find my unmute button. Sorry. So question, or just give me your thoughts because I've heard of dollar cost averaging, but for the life of me, doesn't it make more sense to just have a target return goal, like 30% or whatever, and then pull your money once you reach that target, as opposed to the whole dollar cost averaging?
Well, I teach wealth building. So true wealth takes time. It's not no quick get rich or anything like that. We're talking about wealth building. We're talking about something that you can leave to your generation, pass down to your generations from your family to the next family to the next family. One thing I love is studying millionaires and billionaires, and this is one of the things that they do. This is what the wealthy do. They build wealth. This is something that you're creating for yourself. I don't know if you saw that screen where it shows that you can get 27,000 every year like clockwork. So if you taking it in and taking it out, how are you building wealth? But if you want to do that, there's no right or wrong. It's really about your goals, your dreams, what it is that you want to accomplish. So you can have one if you want to leave a legacy, then you can't touch it. Let it grow because it's going to keep going bigger and bigger and bigger. And with estate planning and having a trust, this can last for generations to generations. If you take it out, put it back in, take them out, like a lot of day traders, that's what they do. They day trade, they take
Yeah.
on a lot of risk. That's not building wealth. That's why I don't deal with options. I don't deal with, day trading. I deal with
Mhm.
long-term wealth because we need to change our financial future. This is what the Rockefeller, did. And they still right now, they're taking care of 200 of their family members still up today because of the buy and hold and the passive income that's coming in. I didn't know it was 10:03. But anybody else have a good, that was a very good question. It depends on your goal. You can have one for wealth building, but then you can have one that you play with or one that you use for when you want to go on vacations. Oh, I'm using this on vacation, and it's about, rebalancing. We talked about rebalancing. It just all depends on your goals and what it is that you want to do. Like I have one that I put money in for, just emergencies. Like I just took some money out of my brokerage account. Felt good to be able to take money out of my brokerage account for when it, when I needed it.
No, thanks. That was a very good way to think about it. Thanks.
That was a good question because I'm sure a lot of people had that same concern. Well, it is 10:04. I want to thank you all for showing up today. Welcome, Delta, Miss Abraham, and everybody else. Amazing Kay, everybody. Thank you so much for showing up. So I like to end with giving yourself a hug because a lot of times we take care of everybody else. We worrying about everybody else, and sometimes we don't love on ourselves and give ourselves some love and grace. We got to give ourselves some grace for even when we make mistakes, things don't go the way, or we didn't make the right choice of decision. Give yourself some love and grace, and then just start, on a new day. Let's hug the world because the world needs a hug too. And let's sprinkle love and light to those that are in authority, because the Bible does say, pray for those that are in authority. So those that are there, we send enough love and light to them, we may be amazed about what miracles can come out of that. So I love you all. I thank you so much for tuning in. I'm, thankful to yourself. You should be proud of yourself. And let's keep building wealth together. We're here together. Let's build and grow together. Peace. Have a wonderful and fantastic day on purpose. Because remember,
Ashe.
it's
Ashe.
always a choice.
Peace out.
Peace and love. Peace and love.